What's going on, smart movers? Time for another one. I'm going to be dropping all of them as much as I can to help you guys out, whether you're a first-time investor, small developer, or you're thinking about relocating to any of these places that's dropping here nonstop. I just want to give you the data behind them so you can know that there's a platform for you that I created, built specifically for you guys. I found out that there was a gap. There's a gap in the system. There's a gap in the game for real quality data at your fingertips. You could spend thousands of dollars or you spend thousands of hours. You're not going to get this type of data this quickly for this price, right? And you can try it out for free, 7 days free trial. Just head over to smartmoversclub.com. But again, democratizing data, because the gap there will make or break your move, make or break your investment. You don't want to move into a place that's already overdone, it's too overpriced, or people are moving the hell out of there because of social issues, crime, and all of the data. There's no jobs, corporations are leaving. So all of this stuff you could find out here. Today we're going to head over to California. We got to head West Coast with this app. I already probably think what it's going to say, just knowing what we're dealing with. But we're going to try out Oakland, California today. I never searched Oakland, California. I don't even think I searched anywhere in California with this app. Because, again, this app is based off of economic indicators and based off of finding undervalued and underserved markets. So we know Oakland is not going to be it. And let's see what it has to say. I'm going to invite you right now to like this video. If you're in California, if you're in Oakland and this popped up and you're like, hey, let me check out what my city has to offer. Or if you're thinking about moving to the beautiful Sunshine State, this is for you. But go ahead and subscribe to the video, like the video, as well as leave me a comment and tell me what you think. All right, we're going to let this thing pop up here, and I'm going to take a sip of this coffee. And it's 2:44 here. You see the time, PM, and I'm still having this cup of coffee. Long cup. All right. All right, let's give this a second. Don't get upset with it, guys. All right, we got it here. Now let's see what we got in Oakland. Look at the ROI. You're on the bottom percent. You're on the bottom percent of that. Behold, this is 0 to 6 months. Here is what we got. A couple things happening in Oakland. You got the Kaiser Permanente downtown campus renovation. I think that's the healthcare option, the consumer healthcare commercial. All right, Kaiser Permanente is renovating and expanding its downtown Oakland campus, increasing healthcare employment and supporting nearby retail and multifamily demand. Amazon Logistics expansion has completed a new logistics hub in West Oakland, aiming to streamline Bay Area last mile delivery and create 650 new jobs, boosting local demand for both residential and light industrial properties. All right, so what do we have here? This is the analysis. This is the full report. We're going to kind of get into it. I don't want to read it word for word. You could go ahead and do that with your free trial. I'm going to skip around here. We're going to figure this out. We're going to figure out what's going on in here. Oakland's economy, sheesh, in late 2025 reflects both resilience and volatility. The city's unemployment rate currently stands at 4.8%. That's slightly above the national average, but improved from early 2024. Job growth has stabilized at 1.3% year over year, with healthcare, logistics, and tech spillover from San Francisco. Square and Pandora is there, acting as primary employment drivers. Notably, the Port of Oakland has rebounded after 2024 supply chain disruptions, boosting both blue-collar and logistic jobs. Population growth has plateaued after a mild pandemic-era exodus, with net migration near zero. However, the city's millennial and Gen Z population remains strong, attracted by Oakland's relative affordability compared to San Francisco. Corporate activity is mixed. While some tech firms have downsized, others are expanding satellite offices in Oakland due to lower overhead. Red flags include persistent concerns over public safety, high property taxes, 1.38% effective rate plus parcel taxes, and regulatory hurdles for new development. These factors create friction for new investment and may deter first-time buyers. However, the city's economic base remains diversified And the return of in-person work in the Bay Area is supporting rental demand in local businesses. All right, so price drivers and market timing. Oakland's median home price as of September 2025 is $785K, up 2.1% year over year, but price growth has slowed from the 21 to 23 boom. Inventory remains tight. Active listings are at a 1.9 months of supply, well below the 5 to 6 month balanced market threshold. This is due to low new construction starts, down 14% year over year, and reluctant sellers holding on to low rate mortgages. Rental demand is robust, with average rents up 4.5% year over year and vacancy rates at 3.7%. The strongest rental demand is in North Oakland, Temescal, and Lake Merritt, driven by young professionals and students. Investors are seeing gross rental yields of 5.2% to 6.1% in these neighborhoods, outperforming most Bay Area markets. The best asset class for the current environment is small multifamily, 2 to 4 units, and single-family rentals in transit-accessible neighborhoods. These properties offer stable cash flow, hedge against inflation, and are less exposed to regulatory risk than larger apartment buildings. Optimal buying opportunities are expected in Q4 2025 as sellers adjust to higher mortgage rates, currently averaging 6.3% for 30-year fixed, and seasonal listing increases. Watch for temporary uptick in inventory as frustrated sellers list before year end. Warning signs of being priced out include multiple offer situations returning in Q1 2026 and any drop in mortgage rates below 6%, which would reignite buyer competition. So right here, we give you the investment vehicles, whether you're thinking about land, commercial businesses, rental properties, you want to flip. This is the pros and the cons. Let's just talk about flipping because it's right there on the screen. It says pros, inventory of distressed homes in West Oakland and Fruitvale, potential for 12 to 18% ROI on well-executed flips. Buyer demand for turnkey properties remains strong in sub 900K range. Cons is high acquisition costs, construction, labor, materials, inflation, permitting delays, risk of market softening if mortgage rates rise further, capital gains tax exposure. So here it is. It's a hold, straight up hold with selective buy, straight up for experienced investors. Okay. For first time investors and small developers, Oakland's high entry costs, stringent regulation, and property taxes create significant barriers. The current median price, $785K, and the effective tax rate combined with rent control and tenant protections make cash flow challenging for new entrants. Only investors with strong liquidity and local market knowledge should consider even entering at this time. The target prices range, look at that, small family, $850K to $1.2 million, North Oakland, Temescal, and Lake Merritt. Single family renters between $650 and $850 in Maxwell Park, Laurel, and Dimond. Is that Diamond? Maybe Diamonds. Okay. Flips, $500K to $700K acquisitions in West Oakland and Fruitvale, targeting ARV under $900K. That's after renovation value right there. Neighborhoods to focus on: North Oakland, Rockridge, Temescal for stable rental demand, Lake Merritt for young professionals and students, Maxwell Park and Laurel for value-add single-family opportunities. The catalyst to watch for there: any drop in mortgage rates below 6% would increase buyer competition. Local policy changes easing ADU or small multifamily development, major employer expansions, or new infrastructure projects. If taxes, regulations, or costs ease, or if inventory rises significantly, the recommendation could shift to buy. However, for the next 0 to 6 months, first-time investors and small developers should proceed with caution, focusing only on well-located, cash-flowing assets and avoid speculative land or commercial plays. Oh my God, Oakland's market is stabilizing after a volatile 2024 with inventory levels rising and price growth slowing. Investors are watching affordability challenges and a slight uptick in vacancy rate. but strong corporate investments are providing a floor for values in key neighborhoods. So this is a this is a 5. This is a proceed with caution, and you see why. The affordability index is not there. The population growth is not there. The infrastructure development is not there. Your market timing is way off. So this is a proceed with caution, which is good good data sets, right? The data suggests this, and this is what the data gives you. Like I love the, sometimes as investors, right? And I've dealt with so many as a realtor in Philadelphia. They're emotional. They want to get in, right? They see their friends do it, their cousins do it. Someone told them about it. They watch the news or whatever and hear about all the movements happening in a place. So they want a piece of the action, and they get emotionally tied to things. And they end up being like the third or fourth wave investors that's overpaying, or you're not seeing appreciation in that neighborhood for years to come, and they're like, damn, what the hell happened? What the hell happened is that you didn't follow the numbers. You didn't follow the data, right? So definitely the data matters, and there's no emotion in the data. It's not good. It's not good. So there's some opportunity zones here. The next thing we're going to do is we're going to take it to the trusty old heat map here. We're going to type in California. Let's go to Oakland here. And let's go to price. Let's do price trend. Again, while this comes up, sometimes my map, I'm doing it on the iPad, so sometimes it gets a little crazy. But while this comes up, go ahead and like and subscribe to the channel. Thank you. I appreciate it. Okay, so this is Oakland. Let's go to price trend here. All right, stable to slightly falling right now. So year minus negative 2.5%. High inventory with 722 homes active for sale in Oakland as of September 2025. Moderate sales volume with 223 single-family homes sold last month. Average sales price slightly down year to date by 2.5% compared to last year. Time on the market averaging 37 days, indicating steady but exceptionally fast sales. Broader California market showing slight decrease and increase unsold inventory. Neighborhood value differences, with some areas like Upper Rockridge commanding much higher prices. Economic and regional factors influencing demand and price stability. Another thing that we want to check out here are the opportunity zones in the area. It's good to kind of look at these, see what kind of benefits we're having. We do find some census tracts here. This one's in Alameda. The census tract is part of Oakland's designated qualified opportunity zone aimed at spurring investment in low-income communities. It includes mixed-use urban areas and a focus on economic revitalization. And then there's one over here. It looks like over by the port. The zone, I don't know where the port. I've never been to Oakland. But there's 28 active projects here. The poverty rate around this area, you get to see the investments that's already committed, the investment opportunities, residential affordability, housing projects, retail expansions, and small business support. This one here is targeted for community redevelopment and affordable housing investment backed by opportunity zone investments. So there you have it. I just wanted to go over Oakland. As you know, it's not a good look. It hasn't been a good look for a while. I mean, all of Cali, really. But I still wanted to show California some love and go through the data with y'all. And hopefully this helps. If it had helped you out, please go ahead and like and subscribe. And I'll see you over at www.smartmoversclub.com on the app.